Hello everyone and welcome to today's webinar on the fundamentals of ESG reporting and verification from LRQA. My name is Louise Hollings, I'm one of the marketing managers at LRQA and I'll be your moderator today. Before we get started, I'd like to go over a few items so you know how to participate in today's event. You may have joined the presentation listening using your computer speaker system by default. If you would prefer to join over the telephone, just select phone call in the audio pane and the dial-in information will be displayed. You have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation and we'll collect these and address them during the Q&A session at the end of today's presentation. For your information, we'll also be running some live polls today. Please note that the responses are anonymous and the results will only be shared as a percentage result. It is my pleasure to introduce our first speaker for today. Heather Moore PE is LRQA's Technical Director for Sustainability, where she supports LRQA's sustainability products and advises clients on their sustainability journeys. She joined LRQA in 2012 as a lead auditor and verifier, providing assessment and verification services for greenhouse gas emissions and other sustainability data, ISO 14001 and social auditing schemes. She's since held various roles with LRQA related to management, training, auditors and verifiers, running second-party audit schemes for global companies and leading complex verifications. Her 16+ years of practical experience in the environmental field have taken her to landfills, power plants, cruise ships, upstream and downstream oil and gas operations, chemical plants, agricultural operations, and various manufacturing facilities. And our second speaker today is Olga Rivas, LRQA's ESG Cluster Technical Manager. Olga has 25 years experience advising and auditing businesses on environmental, energy, health and safety risks, as well as helping organizations to drive culture change. She has participated in verification projects for sustainability reports and non-financial information. This includes extensive senior level engagement with the largest companies on climate change, energy, sustainability verification and certification. Prior to this role, Olga worked as a consultant, trainer and auditor in environmental, energy and health and safety management systems, providing assessment and verification services for greenhouse gas emissions and other sustainability data. I'll now hand over to Heather to take you through today's agenda.
So today you have Olga and we're going to give you a brief overview of some reporting basics. Obviously ESG, environmental, social, governance reporting is the new normal, a standard requirement for really any business nowadays. So we're going to be talking about basics around reporting. And then Olga and I get a lot of questions from clients, from you guys, and so we just wanted to talk about those frequently asked questions. And so they're going to cover verification processes, product claims versus organizational GHG inventory claims, limited versus reasonable assurance when you're going through verification, what the differences are, Scope 3, where to start with Scope 3 emissions, and finally greenwashing. So let's get started. ESG reporting basics. What we're going to do is I'll just give a brief overview of the kind of reporting map here, and then we'll give an update on some of the regulations that are coming out around the world. So here's, you can see, this is a kind of a reporting map that we put together. The left side gives, there's tons of standards, frameworks, whatever you want to call them out there, right? And you can categorize them in 3 main categories. So the first one is goals. And over to the right, you can see some examples that we've given of the documents that are related to goals. And really, there's standards around how to set your goals, how to set your targets. There's a lot that goes into that. And the most popular one is really the Science-Based Target Initiative around your goals. And then there are standards that really focus on frameworks. And the frameworks tell you how to report your ESG strategy and efforts that you're making in that area. So popular frameworks include the Global Reporting GRI, and then that one is really all-inclusive, similar to CDP, that really covers a whole gamut of information. And then there's the two frameworks that are more focused on what information investors want to look at, and that's the SASB standards and TCFD. That tells you how to report your information. So we have the goals, we have the frameworks. Next, really the standards, and what the standards tell you is what to report. We've given some examples here. There's tons more depending on what you're interested in and what you're needing to report. But the two main standards that we see companies using are ISO 1464 Part 1 and World Resource Institute's GHG protocol. And these two standards are very similar, and they help companies know how to report their greenhouse gas emissions, Scope 1, Scope 2, and Scope 3. And so those are popular ones. And then we gave some examples here. Past 2060 is more about carbon neutrality. And then the ISO 1467 past 2050 are more around product claims and life cycle analysis. So standards, right, we have goals, framework, standards, and then obviously there's the regulations as well. And a lot of these regulations are actually using these existing standards and frameworks and defining kind of the what and the how and the why, giving the reason why to report against these standards. Like the SEC proposed rule in the US is basing a lot of how they say to calculate your emissions off of the GHG protocol, and so they're using the existing standards. And requiring companies to report against them. So next, we'll just give a brief overview of some of the regulations coming up. And so the first one is the US SEC proposed rule. It is still proposed. So SEC, for those of you who might not know what that is, that's the Securities and Exchange Commission. That's basically in the US, that's the financial regulators. They've set standards for how companies report their financial metrics and financial strategies and all of that kind of stuff. And now they're saying that along with reporting financial numbers, publicly traded companies in the US will need to also report their climate-related risks along with their financial information. And so it's requiring disclosure of a lot of different things. Some of it is discussion-based. So like the top 3 items you'll see on the left here, the governance, how are companies governing their climate-related risks? What are their climate-related impacts, material impacts, and how are they addressing the strategy and their business model and their outlook, and what do they think are important to them? And also how then following that, how they're managing those risks. So that's more discussion-based. And then it also requires clients or companies to report metrics around their greenhouse gas emissions and any targets and goals that they may have around those areas. So what we're focused on, especially as a third-party assurance body, is companies are having, because the SEC proposed rule, it's requiring companies to report their Scope 1 and Scope 2 emissions, and also material Scope 3 emissions. And in addition to just reporting them, it's requiring them to have a third party verify these numbers as well. And you'll see first, it's proposing to have them verify it to limited assurance. We'll talk more about that later, so you'll understand. And then, but it is having companies transition to reasonable assurance after 2 years of reporting. So that's critical. So let's see, Olga is going to tell us what's going on in Europe.
Okay, thank you, Heather. As you know, in Europe, we have the Corporate Social Reporting Directive that requires disclose environmental, social, and governance information on annual basis from several angles: forward-looking, retrospective, qualitative, and quantitative. The information necessary to understand the organization impacts on ESG, and in the other hand, the information necessary to understand how sustainability matters affects the company's development performance. This is known as double materiality because we are looking for the impacts in the two sense. Which should we report? As in the previous case, we should talk about the business model and sustainability strategy. For example, risks and opportunities, the resilience of the model, the needs and interests of the stakeholders, and of course, the plans to ensure that this business model is compatible with the mitigating global warming to 1.5 degrees centigrade and the achievement on the carbon neutrality on 2050. And of course, how the organization has applied the sustainability strategy. It is required to report sustainability policies and targets. For example, ESG reductions targets for 2030 and 2050 and the progress made towards achieving these targets. Sustainability governance, the roles and responsibilities, ESG processes, for example, due diligence process implemented, and actual or potential impacts from operations and supply chains and actions to prevent or mitigate these impacts. And of course, the principal risk and the key indicators to define the ESG performance. In relation to the assurance, it is requested that an accredited independent auditors or certifiers, depending on the European member state option, provide limited assurance around this report. And when this is applicable, for the companies that now are reporting in the non-financial reporting directive, they should apply all the requirements for the period 2024 starting in the 25. For the other large companies will start in the 25, and for the rest of the companies, the small and medium enterprise should report in the 26. This is the main requirements. Let's go to the regulation update in the UK. So the UK's rules made similar moves than the European Union and the USA. In the UK, as you know, the government has already pushed ahead with mandatory climate reporting for listed and large private companies under the Task Force on Climate-Related Financial Disclosures framework, and the requirements are very similar than the ones that we have commented before. Let's say strategies, risks, objectives, resilience, performance, targets, but always focus on climate change. And we could say that with specific objectives like the 68% of emission reductions for the 2030. Okay, Heather.
Perfect. Thank you, Olga. So I think it's interesting. We have these standards that we talked about in the beginning, mostly voluntary. Now they're starting to be required for regulations, and really, why is that? And that gets back to investors and the finance people, right? Olga and I have worked in the environmental space for many, many, many years, and now finally the investors are realizing that it's important for companies to address their sustainability practices and be more sustainable. And actually being more sustainable is good for business. It's pretty obvious, but it's taken us a long time to get here, right? If you're more sustainable, you'll reduce waste, you'll reduce how much you pay to deal with waste. And when I think about waste, I think about not just the physical waste that we create, but air emissions and everything else that waste in processes. And so sustainability is all about reducing waste and making your company and your products more efficient. And investors obviously are attracted to that and want to make sure that companies are doing that. So how do you do that, right? What are the best practices for achieving progress and also reporting on that progress? What we've seen companies do, right, you have to start internally. You have to start with what's going on and how you're reporting progress. And that really gets down to data and your internal processes on collecting that data and ensuring that the data is accurate and complete. And that's not, it's a simple sentence and a simple concept, but it's not a small task. And a couple things that I've seen companies do that have really worked is, one, they're realizing that sustainability data is becoming equal to financial data within companies, and financial data goes through a lot of rigor and a lot of internal procedures and processes to make sure that it's accurate. And some companies the environmentalists are becoming friends with the finance guys and making sure that they can do the same thing with the sustainability and environmental data. And it's not just a one-time thing. To make sure that it's accurate and complete is a process. You have to have a system in place, internal audits, reviews, to make sure that you're continually ensuring completeness and accuracy, right? And so that's looking at how finance does that. But also, I guess the next block here is a lot of companies have their sustainability practices. They also have existing environmental health safety practices and procedures in place. Maybe they have a certified system in place for 9,000, 14,000, 45,000, or maybe they have informal systems in place to handle EHS requirements. And usually sustainability and EHS is really going to be looking at the same information. They're going to looking at energy efficiency, water use, waste, all of these things. They're trying to continually improve that as part of the EHS program. Make sure that that's paired with your sustainability strategy, with your sustainability initiatives, and make sure you're all working together. Then once you have that process set, it's time to look at your external focus. What frameworks are you using? What standards are you using? Get that straight. And then once you have that straight and you have that set, then bring in a third party and have the data reviewed and reports verified. And once you have a third party who says, yes, that's good data, then don't be afraid to share what you're doing with everyone else, because really in the big picture, we have a lot to do in the sustainability space. And if we don't share and collaborate, then we're missing opportunities. Great. Olga, do you have anything to add to this one?
No, we can say that, for example, in the management system, we have a lot of tools that we can use to start the process, collecting the data, the risks, the opportunities, and to focus on investors and expectation and risk, and working with this tool as a basic of the collection of all this information. This is a very, very important point, and the external focus is very important, because sometimes the companies make their own reflection about that, and it is very important to talk with the investors, with the sector, with the clients, in order to know what are they expecting.
Perfect. Yes, use the tools that you already have to do this. Let's not try to reinvent anything. We have a lot of tools and a lot of processes that fit really well into sustainability. Excellent. So now we have our first poll question.
Thank you, Heather. So our first poll question today is, what is your organization's current approach to ESG reporting and verification? Please select all that apply. So the options are, we do not currently produce an ESG report. Secondly, we're preparing our ESG reports for the first time. Or we have a process for ESG reporting, but the results are not verified. We want to have our ESG reports and/or data verified in the future. Or finally, we have an established ESG reporting and verification process. So I'll just run through those options again. So the first one is, our organization does not produce an ESG report currently. We are preparing our ESG reports for the first time. We have a process for ESG reporting, but the results are not verified. We want to have our ESG reports and/or data verified in the future. And finally, we have an established ESG reporting and verification process. So I can see that the answers are still coming through. And we have, so 41% do not currently produce an ESG report. We've got 21% preparing their reports for the first time. 19% are reporting, but the results aren't verified. 16% want to have their reports or data verified in the future, and 20% have an established process. So a real spread there. And so,
I think that's
Olga,
excellent
Heather,
that we have.
anything?
Yes, I was just going to say the one number that stuck out to me was the 41% who haven't done reports before. And I am excited to see the interest, and I'm sure you're already doing things within your organization that investors or stakeholders would be interested in, and this is a way for you to share your good news.
Absolutely. Okay, so if we can move to our second poll for today. So this one is around the frameworks that you're using. So let us know which of the following frameworks, if any, you're using at the moment. So we have SASB, TCFD, GRI, CDP, or if you're using an industry-specific or other framework. If you're not using any of these at the moment, you can leave this poll for this time, but I'll just run through those options again. So you've got SASB, TCFD, GRI, CDP, or industry specific or other schemes. It's all the acronyms today. So thank you for answering there. So we've got half of the respondents are using an industry specific or other framework, and then GRI has 26% and 17% for CDP, 11% for TCFD, and 9% using SASB. Is that in line with what you would expect, Olga and Heather?
Yes, because at the end, depending on the country, depending on the sector, there are a lot of frameworks, and it is usual this diversity in the response.
Yeah, I would suggest for those of you who haven't started reporting yet and are trying to figure out how to do that, what's most important is how do you figure out what's material to your organization and what's material for you to report, what's important for you to report. And I would just say that I look often at the SASB standards because they go industry by industry, and they've gone through a big process of talking to investors and understanding what's important to each industry. And so if you want to know where to focus on your reporting, SASB standards are a good place to go.
Thank you. Thanks for that insight, and thank you to everyone who's taken part in these polls. We'll have one more before the Q&A session, and just a quick reminder that you can submit your questions for the Q&A at any time before and during the Q&A. So I'll now hand you back to Heather and Olga, who take you through some of the most common questions that they get asked about verification and reporting. Thank you.
Excellent. It was great to hear from everyone. Thanks again. So once you have put together your data and put together your greenhouse gas inventory, you're thinking about verification. What does that look like? I know I get a lot of questions from clients. It's a scary thought, right? No one wants to get audited. I would say we are here to help you, and this is an overview of what a verification process might look like for you. This verification process is compliant with a couple different standards. So there's standards that tell you how to report. There's also standards that tell us how to do the verification. Two most frequently used standards are ISAE 3000 and ISO 14064 Part 3. They're both fairly similar, and this process complies with both of those. So first, you as a client will give us the data that we're going to be verifying. That could be a greenhouse gas inventory plus energy, water, waste data, whatever it is, safety data, whatever it is that is important and material to your organization. You give us that inventory and that data. An inventory usually looks like it'll give a list of all of your facilities. It'll show the activity data, like the kilowatt hours, the therms of energy that you've used, and the emissions associated with each of those sources at your facility. So it's pretty detailed. information. We use that, we kick off, we plan how we're going to do the verification, then we move right into what we call stage 1, which is where we do the risk assessment. So we have a lead verifier who looks through your data, makes sure that they understand where the biggest emission sources are, where the most complex calculations happen, perhaps looking at the audit trail, understanding where there's most risk for an issue to happen. And based on that analysis, we develop a sampling plan. And the sampling plan is we're going to sample facility A, B, and C. We're going to look at this process. We're going to look at this. So and it's different for every organization based on your own internal processes on how you put together that data. So then once we've developed a sampling plan, you might give us additional data we need to carry out that plan. And then we move on to stage 2, where we're just carrying out that plan. A lot of these things happen remotely. And just to note that. So then stage 2, we sit down, we look at your data, we look at our sampling plan, we work through that process. There's going to be some findings. I think I've only verified one inventory that we had no findings, and they had been verifying with us for quite a long time. So that was unique, and it was a simple inventory. And so anyway, you're going to have some findings, but that actually is improvements to your data, to your processes, right? You'll have an opportunity to correct those findings and to close them. And once you do that, you'll give us the corrected inventory and the corrected data. We'll go through a technical review process internally, where we'll be able to close those findings basically, and then technical review is making sure that we followed all of the correct steps that we needed to do. And then the output of the verification process is a final report and assurance statement. One thing to note is that this is a process, and it can be applied once per year, looking at a previous year's data, or it can be applied on a quarterly basis or biannual basis, or whatever works best for your organization. It's just interesting to note that this can be applied in various methods. Hopefully that answers your question a little bit on what verification looks like. Over to you, Olga.
Okay, so sometimes we receive the question that is, what I should do verify first, the product claims or the organizational results, which is better? And we have a good news that the verification process is the same as has explained Heather now. So once that you have carried out one verification process, and you are confident with that. And in order to decide how to verify, we have another good news that you have standards for guidance that provide guidelines and verifying and quantifying the greenhouse gases for organization, that is the ISO 14064, the part 1. If you are interested in the product claim, you have the 67, the 40,067, or the PAS 2050. If you are interested in verify a claim of a carbon neutrality of one site, one product, or inclusive one event, you have the PAS 2060. The majority of the companies start verifying, for example, the scope 1 and 2 of an organization, that are the direct emissions and indirect emissions of electricity and steam purchased. And later, or in the first verification, they go with the scope 3, that are the other indirect emissions from the other sources. And depending on the needs, for example, there are, for example, in the taxonomies, for some products is requested to demonstrate that the product is better in emissions using the ISO 14067, or for example, for some type of sectors in the food sector, or inclusive in the steel in relation with the automotive, they are asking for product claims verifications. And later, usually, some companies are interested in verify the carbon neutrality for a specific product or a specific site. This is more or less the normal situation. Although the most important, as we said before, is to be very clear on your stakeholder and investor expectations in order to start giving confidence in these aspects. Mhm.
Wonderful, thank you, Olga. And on to a slightly different topic, limited versus reasonable assurance. And what does that mean when you're going through verification? So limited and reasonable, those two terms came from a financial auditing standpoint. And what I'm going to do is I'm going to start at the bottom here at the opinion statement, if you can see, just so you're understanding the conclusion that you'll get from the verification body for either level of assurance. So for limited assurance, if you read the opinion statement, it sounds like it's a double negative, right? We say we didn't see anything that didn't look good, and that's as far as we can do for limited assurance, because we don't look at the data as much as we do for then the reasonable assurance, where through that process we can claim a positive statement, a positive opinion that says everything looks good. So in order to get to those two conclusions, there's several differences within each phase or each stage of the verification. First, I would say materiality is a concept that guides, I would say it guides three things when you're doing a verification. Materiality, usually it's set at a percent, like 5% here, we give an example. But then for limited assurance and reasonable, it determines these three things. One, it determines how deep we dive into the data, how much we sample, and also how we grade our findings. So that's materiality. Once we've established what the materiality is for a verification, then let's move on to stage 1 and stage 2. So within stage 1, the risk assessment, when the lead verifier is looking at your inventory, looking at your data, whether or not it's limited or reasonable, we're going to be doing the same activities to determine the risk, right? The risk is the same whether or not we're doing limited or reasonable. So risk assessment is the same, but the difference is when it comes to establishing the sampling plan. For limited assurance, there's going to be less emphasis on detailed testing of the data and how deep we dive into the data and how much we sample. And we're more reliant, we're going to be reviewing your internal controls, interviewing responsible people, looking at procedures and processes to make sure that they're robust enough, and relying more on those. For reasonable assurance, we're going to have a specific sample size that we have to meet, and we're going to set how we're going to test that sample. So that's the sampling plan. Then we move on into stage 2, like we discussed before. And limited assurance, we can rely on summary data at a site level versus primary data. The difference is there. One example is just like for electricity, primary data would be the invoices that you get from your utility. Summary data may be your facility manager has an Excel spreadsheet where he or she keeps a summary of your monthly electricity usage. That would be summary data that we can look at for limited assurance, but for reasonable, we would need to sample a certain number of invoices to make sure that it's being tracked correctly. Other primary data we would look at for reasonable assurance might be meter readings, calibration records, purchase records. It really depends on what data you're relying on to calculate your emissions. The other difference during stage 2 is that for limited assurance, site audits and site visits are not required. Sometimes we might do them depending on the complexity of the verification, but it's not required. For reasonable assurance, site visits or site audits are necessary. So hopefully that answers a little bit of your questions around what's the difference between limited and reasonable assurance.
Okay, wonderful, Heather. So another question that is very usual is where to start with scope-free emissions. No, you know, we have commented that scope-free emissions include a lot of emissions that are not often under the control of the organization. No? For example, we have the logistics emissions, the transport from the raw materials, from the products. We have the emissions associated to the raw materials. We have the emissions of the use of the product, of the end waste of the products that we have. No, you can see here, and I think that it will be better if we go with an example in order to go about that, because it is very interesting understanding the scope and measuring the scope-free emissions, because the companies can gain a more comprehensive view of their carbon footprint and identify opportunities to reduce emissions through their supply chains. It is very, very interesting to take the actions and to make these plans of reduction. Let's see the examples. For example, we can take an example of the scope 3 of a company that manufactures, packages, and distributes beverages. And we can find these sources in the scope 3. There are more, no, but these are the 3 principles, that the ones that has more volume. And volume is an important point. The percentage of emissions is an important thing in order to be more accurate, no? We can get this data from our purchasing database, a lot of information, but the level of accuracy depends, for example, of the first thing is about the percentage of the emissions. No? For example, let's take packaging and go deeper. No? And if we go our purchasing database, we see that we have different type of packaging. For example, glass, card boxes, steel, plastic, and we know that one of the biggest, depending on the industry, but one of the biggest is the glass. And in the other hand, another criteria to be more accurate is the opportunity of improvement that you have. There is an opportunity related to this material. No? For example, if we choose the glass, we can take in account for this accounting the glass characteristics, no? Because we have different type of glass, green, brown, or white, depending on the level of material recycled that is in the material, the bottle, the weight of the bottle, and we have all this information in the supplier data sheet. We can take, for example, because as you know, for the calculation, we have the activity data that we can obtain mainly for our purchasing database of the quantity that we bought during this year, and multiplied by the emission factors, no? And the emission factor depends on the glass characteristic. So if we go in deep in the glass characteristic, we can find some information that can provide from the suppliers, no? That is, for example, the specific emission factor of one side of the supplier, no? Because we could use the general emission factor that is in database of emission factors, or we can work with our supplier in order to reduce all the emissions in our value chains. And this will depend about, for example, of the percentage of recycling of this material, or for example, another improvement, it could be the bottle deposit return scheme. So this is the way to create this information about the emissions in the scope 3, and depending the accuracy, it will depend on the percentage of the emissions and our capability to identify recent opportunities in these sources. And we use in the verification a similar method for create the sampling plan. So we look at the sources, we look more deeply at the sources with more percentage of tons of CO2, or with more opportunities of reduction. Okay.
Excellent. Thank you, Olga. Yeah, this is a great study of how a company really went into one scope 3 category and focused on what's material, and was able to get all the way down to the supplier level and figure out kind of the true emissions. I would say if you're just starting out with scope 3 emissions, we also see a lot of companies just use spend-based emission factors. There's a WRI GHG tool that you can go in and you enter in what dollar amounts you've spent on, let's say, purchased goods, on certain categories of purchased goods, and it'll help you calculate, at least benchmark your scope 3 emissions, and you can tell from that which category are more important for you to focus on. So once you've benchmarked those using the spend-based analysis, then like this, you would go in and focus on material items and That's when you can begin working with your suppliers, understanding their emissions, looking at their scope 1 and scope 2 emissions and how they apply to what you purchase from them. And then that really, that gets me really excited, because that's where changes can happen and throughout the whole supply chain. So very cool. All right. So our final topic is about greenwashing, and we get a lot of questions about this. I think we all have an idea of what greenwashing is, what it means. When I was doing research, I actually thought it was interesting. I found the origin of the term greenwashing, which I didn't really think about before, was in the hospitality industry. And when they say, you know, hang your towel on the door and we won't wash it every night, saying that we're a green hotel. I don't mean to be bad-mouthing hotels, but that's where the term greenwashing came from, was this idea about how to handle towels at hotels. But now it applies to everything, right? How companies need to, what I say, actively and verifiably demonstrate how you're making the world a better place, right? This is what we put on the slide, but what progress you're making. You want to take credit for that. Or if you're having struggles, you know, challenges that you've overcome, that's also good to share. So how do you do that in a way that makes you feel comfortable for sharing these things? And so I put two pictures here at the bottom of my screen, on the right and the left, which I thought were kind of good and bad examples of claims that companies have made. The one on the right, if you can read it, it was a paper bag that I bought some apples in, and I thought it was interesting because it didn't really have anything on the bag except this one comment. It said, in an effort to reduce our carbon footprint, this bag is renewable, recyclable, and biodegradable. And that made me question, how is the bag renewable? Do they really mean renewable? Do they mean that it was made by renewable energy? Or do they mean reusable? It's a little bit unclear there, right? Recyclable, okay, I understand it's paper. Biodegradable, it's also paper. But how is that actually reducing their own carbon footprint? Is that directly related to their own carbon footprint, or what carbon footprint are they talking about? What's the scope? So there's a lot of questions in this statement that I think it's just not clearly stated what they mean. And it was more, to me, this is more of a marketing effort, right? It sounded good to them, but they didn't really think about it. So then the other example that I have is a cereal box. And I mean, these are just examples that I chose, right? I haven't worked with any of these companies myself personally, but I thought this one on the right or the left talked about they measured the carbon emissions from the cooking and baking of our foods, which is a good way to scope what you're going to say in a layman's term. So they're not saying we calculated our scope 1 and scope 2 emissions. They're putting it in a way that everyone can understand. But I think, but it accurately represents, this is just the cooking and baking of our foods. It doesn't include emission. It doesn't include scope 3 emissions, right? From growing grains or anything else that would be back behind that. It's just the cooking and baking of our foods, and it says and offsets those emissions through programs that reduce amounts of greenhouse gases in the air. So basically, they're purchasing carbon offsets or carbon credits equal to their scope 1 and scope 2 emissions. But I thought that was a good way of putting it in layman's term that makes it quite clear and defined. So how do you not make the mistake of this paper bag company and be clearer about what you say? I think the first one is knowing your standards, right? There are standards out there to help you make claims. The standards that we've been talking about through this whole webinar are good. There's also ISO 14020. There's a whole slew of standards around specifically environmental claims, and like ISO 14021 talks about self-identified claims, and you know, it gives you words to use, words to not use, gives you guidance on how to make that claim. And so, you know, use that. That's there for you to use and help you be confident in making these claims that you want to make. So first of all, right, know your standards and use them as your tools. The second one is get verified, right? Get your data verified, have a third party come behind you, look at what you're doing. You know, if we were to verify this paper bag company, I would have commented on that sentence and helped them make it better so that it was clearer when they put it on their bag. Simple things, but let's all know the standards and get verified, and then you can be confident in making these claims. And I guess on the right, there's a green claims code that gives some good advice that we thought would be helpful, and you can read those as well. All right, so last poll question.
Thank you, Heather. So before we start our Q&A, we've got one more poll question for you today. So will your organisation be looking for any of the following assurance or training services in the next 12 months? And please select all that apply. So we've got ISO 14001, the environmental management standard, ISO 50001 for energy management, greenhouse gas emissions and other data verification, product carbon footprint verification, and report assurance. So those options again, ISO 14001 for environmental management, ISO 50001 for energy management, greenhouse gas emissions and other data verification, product carbon footprint verification, and report assurance. So if you're looking for any of those, please let us know. And if they don't apply, please feel free to pass on this poll. So we have got over half of the respondents are looking for verification, which is great to hear, and hopefully you've been inspired by what you've heard today. And then also for 14001, also very popular with 41%. So thank you for taking time to take part in the polls, and it's now our turn to answer your questions. So as a reminder, you can still submit your questions through the questions pane in your attendee control panel. Olga, our first question is for you. You explained earlier that in 2024, CSRD will apply to the same companies that were affected in the past by the non-financial reporting directive. Can you give some more details on this, please?
Okay, of course. First, I would like to say that the information of the Corporate Social Reporting Directive extends the scopes of the reporting obligation to more information, environmental, social, and governance information. But the companies in the first period, that is the 24, are the same that are reporting the non-financial reporting directive. That mainly are the companies established in the European Union, Iceland, Liechtenstein, and Norway that have, this is included in the directive, but there are details, for example, that the balance sheet assets of more than 20 millions, the turnover exceeding more than 40 millions, and the average number of employees during the financial year exceeding 250 employees. There are these kind of details that you can check in the directive for all the groups.
Thank you. And while we're on that one, we've got a kind of question that relates to it. So someone's asked, Mark has asked, does CSRD completely supersede the NFRD?
Yes, the companies in the first period, the companies that are in FRD, it should be included in the first period of the Corporate Social Reporting Directive, although the information that they should report is enough different, is enough bigger, and with a perspective more than governance, risk and opportunities, more than exclusive reporting of data.
Thank you, Olga. Heather, our next question is for you. How do you verify Scope 3 emissions?
How? I would say we use the same verification process that we presented during this webinar, but it also depends on how the Scope 3 emissions are calculated. So we talked about spend-based emissions, which are basically you look at how much, let's say you purchased some raw materials, you look at how much you spent on purchasing those raw materials. There are emission factors associated with that. So we would look at did you correctly classify all of your spend on that? Or is it complete? Is it accurate? We would look at your financial records to understand the input to that. We would make sure that you're using the right emission factor applying to that dollar amount, and did you multiply it correctly, right? That's fairly simple. Versus if you're using another way to calculate, if you're going all the way to the supplier level, like what Olga talked about, and getting emissions from your suppliers, we would make sure that that process was correct and that looking at accuracy and completeness in that process.
So on that point, we've had a question from Max on what can organisations do if their suppliers won't give them information for Scope 3 emissions?
Olga, do you want to take that, or do you want me to? I would say if your suppliers won't, that's a conversation that many of our clients have been having with their suppliers, and starting, now that they understand they're going to have to work with suppliers, they're starting to redo contracts, new contracts. They're setting in requirements so that they don't get to that position, right? But if you haven't redone the contract, if you can't for any reason, and they're just refusing to work with you, it depends on how much influence you have over that supplier. And I mean, there's ways to estimate emissions based on spend-based or other estimations that you can make based on industry averages, whatever it is. So you can still estimate your emissions in that category, but your influence over the supplier, if you have a lot of influence, then you can require them. Many smaller companies who are suppliers to larger companies are having to report this information and kind of being, I don't want to say being forced to, but being, if they want to remain a tier 1 supplier, they have to report these emissions.
Yes, it's like a chance, because sometimes you can think that you have not enough influence in a high impact supplier, for example, the one of glass or this one that are, but all the companies, for example, in this example of the beverage sectors, are requesting, because the majority of the percentage of the emissions are in the Scope 3 in this part, and they have a lot of requests of all the clients, and at the end it's not your individual influence, it's the influence of all the companies that are trying to go to reduce the emissions, and that they make some investment in this part in order to can reduce this emission factor. So it's like the whole change is a question of collaboration and work with the suppliers and the supply chains.
Thank you, Olga. So we've had a question, a kind of related question from Yannick. Is it mandatory to report Scope 3 emissions? And why should a company report Scope 3 emissions when another company has already reported it as a Scope 1 emission?
Okay, it is not mandatory. Well, it depends on the country that you are, depending on the legislation, depending on your sector. But initially, let's say that is not mandatory. You can start with the Scope 1 and Scope 2, but it is, if you want to make, because you have this request from the stakeholders, the investors, to make a big reduction or an important reduction of your emissions, it is very important to have the Scope 1 and 2 and 3, because you have more opportunities to work in these plans and reduction. So let's say that is an stepped processes that you start by the Scope 1 and 2, but the objective is not only the reporting and the verification. This information will be used in order to make this plan, these strategies, and to demonstrate this performance. So for this reason, it could be immediately to prepare the scope 1 and scope 2. The companies realize that it's very interesting for them to include in a voluntary basis the scope 3 too.
Thank you, Olga. We've had a question about like the company sizes and types that are required to report on such data. So this person's asking, they're a small company with no production line, and they're being asked for ESG programs and data verification, which seems like a big ask for their company. So just wondered if you had any advice.
Sure. I would say it's if you look at your organization, not considering you know comparing yourself to a big manufacturing company, those issues are material to your organization. You know, your energy data, your water, your waste. It's important at your level. And so it's good for you to be calculating that. There are tools that are available. I know GHG Protocol has tools on their website to use to calculate your emissions. I mean, there's simple ways to do it. Good news is that if you just have electricity and heating, your emissions are pretty simple to calculate, and verification isn't too difficult as well. So it shouldn't be a detriment to you to do that. But there would be value perhaps to you to understand it. You know, I mean, the value there is if you start measuring your energy consumption, you'll realize there's some savings you can do, some efficiencies you can reduce it, and pay less for your energy. You know, I mean, that's one value of going through the practice to monitor that data and measure it, and then you can reduce it.
Okay, the next one. So, I'm just trying to group them together because I'm conscious that we're running out of time now. So let me see where we can group them together to try and cover as many as we can.
I see a quick one, or
yeah.
maybe Louise, I'll let you go.
No, go for
Yep,
it.
go ahead.
No, you go Heather.
Oh, I was going to say, I see a quick one around asking about what limited assurance is.
Yeah.
And I think we answered there's two levels of assurance when you go through verification, and it results in two different opinion statements. And limited assurance is it's more limited, right? Reasonable is where you dive deeper into the data and you get a positive statement saying everything looks good. Limited assurance is we don't dive as deep into the data, but we do an overview, and it when you report to CDP, when you report to other organizations, DGSI, other organizations, they accept limited assurance verifications. And like for CDP, you get points for submitting a verification statement. Limited or reasonable get the same amount of points. And so many of our clients do limited assurance because that's sufficient for their needs. They also said they're confused as to verification against ISO 14064 Part 1 and then broader ESG reporting. So one thing we focused on in this webinar was data verification, where we're verifying metrics like greenhouse gas emissions. There's also what I call report assurance, where you have put together a sustainability report named, you know, CSR report, ESG report, whatever you want to call it. It's a report that you talk about your progress. There's also assurance against that, where we would check to make sure you've reported per GRI or per these other frameworks. So that's a more qualitative piece of work. Yeah.
Thank you, Heather. We've had a few questions about looking at other like elements of ESG apart from the kind of greenhouse gas emissions. So maybe just a kind of question to summarize those about how how you can verify those. So looking at like CSR programs, health and safety, and well-being, things like that.
I can answer that quickly, I guess, Olga, unless you have anything more to say on that. But we have included, I mean, data verification is data verification, right? If you're reporting metrics around diversity and inclusion, a lot of our clients report % of women in leadership, or they report their safety metrics. You know, we can verify those using that same process. So we follow the audit trail. You know, it may be not looking at energy data, we're looking at data from HR, or we're looking at data from safety, you know, systems, and ensuring that incidents are being recorded properly and rolled up properly and things like that. So we can verify that data. But social, I mean, so there's ESG, environmental, social, governance. Social goes much deeper than that. It's not just looking at safety metrics, because there's labor audits, there's social audits as well that look at how workers are treated, and there's audits that cover that. There's audits that cover, when I think about governance, I think about ISO systems are a good way to govern processes, and maybe, you know, that way. So governance is kind of how you're managing all of this stuff, and we have, you know, you can look at that as well. I don't know, Olga, if you have anything to add to that one. Okay.
And if we've got time for just one last question. So somebody's asked what organizations should be looking for when choosing an auditor. So what, how do they verify that the company that they're using is kind of accredited? What should they be looking for?
Okay, depending on the purpose that they have. For example, in relation, for example, if you are doing your verification for your investors, it could be good to, and you want to include it in the CDP. There are some companies that are partners, and you can look at that, which companies are included as partner, that LRQI is included there. Or for example, for the Corporate Social Reporting Directive, it will be an option of each country. So each country will develop a law explaining which will be accredited to carry out this job. So depending on each standard or each framework, you have different places or websites to check which are the accreditation requests for the auditors.
Yes, I would say that there are many firms, all the way from the big 4 financial firms all the way to small environmental consulting firms, who offer verification services. For me, I think it's important that the verifier is accredited, because that way you know that if the verifier is accredited, verification body is accredited, that means that someone else is looking at our processes and making sure we're doing the right things, right? We get audited just the same as you do. We get findings. We have to address that. We know our verifiers are competent, and that's guaranteed through the witness audit process. So you know that, and there's various accreditations. I think some of the main ones are UCAS accreditation body. They offer greenhouse gas verifier accreditation. ANAB, which is the American version, also offers a accreditation for greenhouse gas verifiers. So I would check those out.
Brilliant, thank you both. And I'm afraid we've just gone over the time slightly, so we're going to have to wrap it up there. But thank you to Olga and Heather, and thank you for everyone who's joined us today. We've had so many questions, but a lot of them are on similar themes. So I think what we'll try and do is to put together an FAQ document based on this, so we can go back to everybody with the responses to cover all the great questions that we've had today. So once you leave today's webinar, you will receive a survey on the presentation, and we would appreciate it if you could complete that and provide your feedback. And you'll also receive a follow-up email within the next few days with a link to the recording of today's webinar. So on behalf of LRQA and our presenters, I'd like to thank you for joining us and hope you have a great rest of the day. Thank you.
Thank you.
Thank you.